Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, March 15th, 2011. Well, folks, the market's again taking a massive dump on the back of a crash in Japan. Yes, the Nikkei index was down 11% last night. Over the last few sessions, basically down 20%. Huge drop as the earthquake, then tsunami, then essentially a meltdown occurring in Japan, radiation going all over the place, even as far as Tokyo. And again, yes, it's very minor in Tokyo, but nonetheless, an ugly situation. And again, my heart goes out to everyone there in Japan that's dealing with this catastrophe. Bottom line is, though, the markets again were smoked last night. Again, we saw the futures on the S&P 500 down as much as 35 points overnight, if not more. This morning we opened down in those levels, but quickly the Federal Reserve probably came in and supported this market just a little bit. Remember, they're not going to allow another flash crash. They're not going to allow certain things to go on, and thus the market will get supported on these drastic overnight level drops in foreign markets. And again, clearly you can see a gap down to about the 126.50 level, and then quickly a bid comes in, a little bit of a fall as volume is very, very heavy, and then as the market floats up, volume declines a little bit, although it's still a very, very heavy volume day. Now, a couple things to go over. Obviously, you have to wonder what's going to continue to happen in Japan. As we get more information, the markets will adjust. You're going to see constant variations, constant whipsaw in this market because it's just unknown about how much of an issue this is. I mean, more and more knowledge is being, received essentially, but you still don't have the facts yet. You don't know how long lasting. What effect is this going to have on the Japanese economy? What is it going to have on the global economy? The global economy is the big question. That's why the United States is taking a big hit. We're a huge trading partner with Japan. Japan's the third biggest economy in the world, so obviously a huge hit to their economy will most likely have a ripple effect throughout the globe. Now, some other keys, folks. We saw gold and silver selling today. We've seen oil dropping today. I'll explain those in a little bit, but bottom line is, think about this. If you're seeing a major slowdown in Japan, the Federal Reserve is currently meeting. They will have their announcement out on Federal Reserve interest rate policy in about 5 minutes. It's right now 10 after 2 p.m. Eastern Time. At 2:15 p.m., we will get that word out. My thinking is this, folks, and again, as we discussed it, I want to flip over to the 60-minute. You can see the drop. There's a major pivot low here as well on the charts from yesterday's low that we have to watch if we get any sort of surge into the close or whether or not we sell off. We'll watch for the lows of the day. But bottom line is this again. If you look at the Federal Reserve, the Fed has been under pressure now to even cut QE2 short based on how strong the economy's been looking and how inflation is starting to bubble up. Based on this Japanese situation, based on what's going on in the Middle East, based on higher oil prices, that is off the table now, in my opinion. You will not see the Federal Reserve close QE2 prior to the $600 billion by the end of June. Now, the bigger question remains, will they do QE3 now? Will this trigger them to do QE3? And again, I think Bernanke wants to. I think he's wanted to all along. I think he wants to continue to flood the market with money. That's what they've been doing from the start. They don't want to end it at any time soon until they have this full-fledged recovery underway, which in tune with that is going to come with massive inflation, but I don't think he worries about that as much. But bottom line is now is QE3 on the table, and I think that's the big question we have to start thinking about for the markets, because as of 2 weeks ago, as of a week ago, when the market started to worry a little bit about that, that's when we started to fall. Now you have an extracurricular event in Japan, but if that subsides, do the markets start going up on anticipation of QE3? Watch very closely for the economic numbers. Watch what the Fed says in a couple minutes. This is going to be a major event. All right, and again, right now you're looking at the Spider S&P 500 ETF on an intraday 10-minute basis, symbol SPY. Now, there are some other big movers in the day. We're going to talk about them. Obviously, the market's, again, having a massive gap down on the back of that Japanese situation, and since then, we've really rotated up. The Dow Jones Industrial Average is still down about 179 points. NASDAQ's still down 41.5, and S&P's down about 19, but that's only 1.5%, folks. Again, we saw Europe down as much as 5% last night, and Japan down 11%. So, again, you have to anticipate you probably see a rebound in Europe overnight. Even in Japan, it's a good chance that you'll have a little bit of a bounce back as bargain hunters come in there and things maybe aren't quite as catastrophic as first feared. But bottom line is, let's take a look at the dollar today. The UUP gapped up and since then has sold. Notice how the selling on the dollar today, this is the UUP, which is the Power Shares US Dollar Index ETF, and again, symbol UUP. But bottom line is, notice the gap up on the fear, and as the fear has subsided here a little bit, the dollar has come in. And again, the big thing to note here, folks, look at the dollar on the daily chart. This is the ETF again, the UUP on the daily chart. Look at how it's just continued to come down. It's trading basically at the 52-week lows right now. And with all this going on in the global setting, with the Middle East, with Northern Africa, with Europe and the issues that are bubbling up there again, and going all the way over to Japan, the dollar is still at the lows. Now, if you go back 2-3 years ago, this would have never happened. The dollar would be soaring right now. And this tells us that, again, there's been a rotation away from the safety of the dollar. The dollar is no longer looked at as the reserve currency of the world. It is not, bottom line. It is just not. And again, you can clearly see that because everyone would be rushing to the dollar. The dollar would be having a huge gain today, and it's barely having any gain, up 2 pennies on the UUP. And again, if you look at the chart and what's been going on, look at since right over here, since over this area right here, this is when the really eruptions in the Middle East started, and then obviously with Japan, and the dollar is still at the lows of the day. So that's a big change. This is a change that you're going to look back on in 15, 20 years and say, remember when. This is something that history books will write about, folks, as the dollar becomes no longer that reserve currency. All right, so just something I wanted to point out there. Now, if we go to the GLD, you're seeing even the gold chart selling here. This is the Spiders Gold Trust, symbol GLD, and you can see a pretty big drop here, although it's not down to the 50. I told the intraday stock chat today that the 50 moving average would be a buying opportunity if we got there. We haven't gotten there yet, although gold GLD is still down about $3. You're really just seeing a flight to cash, a flight to bonds. You're looking for the safest thing in the world. I think gold, again, yes, it's safe, but with the issues out there in Japan right now, people just want to be either in cash or in some sort of more safe asset, as gold has rotated up dramatically. And again, I think that's something to note, is that gold has always been a safety place, but remember, gold is sitting at all-time highs here, and it's a very, very inflated kind of commodity right now. Same thing with silver. Silver's had such a run, and if you look at the silver SLV here, iShares Silver Trust, symbol SLV, it's dropping pretty nicely today, although still having a nice move up on the daily chart. And take a look at the daily. This is the daily run up, and look at the pullback today, holding on that 20 moving average. That was actually a good little bounce at the open to buy the 20. If you look at the intraday SLV, look at that move up from the 20 moving average, the initial hit today. So again, going back to the dollar, the daily chart of the SLV silver, you can see it's down substantially, down $1.50 on the day, which is a big fall, but it's still holding that 20. If it breaks the 20, it's going down to this pivot low right here at $31.25, and $31.25 will be your next major support if it breaks the 20 at some point in the next few days. If not, if it doesn't break the 20, and if it closes above 33.40, in my opinion, it's heading back towards the highs. So really watch this pivot point, this pivot low right here, and this 20 moving average. It closed below this area right here, and it's going down. As long as it stays above, you could see a float up on silver over the next few days. All right, so we will be watching that very closely. I think it's a major pivot point there. Now, looking at a couple other stocks out there, let's take a look at Intel. Intel is getting hammered today, down 72 cents. This is symbol INTC. And the key here, folks, is to note the drop-off here. And why would Intel be dropping? Well, essentially, if you have this catastrophe, and what this catastrophe has done in Japan simply means that the Japanese economy will take a little bit of a hit, and globally, because they're such a big player in the global economy, there will be a hit as well. Now, that means overall less demand for technology, less demand for this, less demand for that. These stock prices are adjusting to that. All right, and again, maybe it's an over-adjustment. That's something that we have to watch. But right now, I think it's significant that Intel is actually trading below this pivot low from the 7th of January. It's actually gapped below, and it's held below, even though it's retested that. That means this stock, or this ETF, this stock Intel, could go down to this pivot high, which is, again, from the 13th of October. You can see it touched that, so that's going to be your support on the downside. And if you take that out, your next major support on Intel will be at 1975. If you get through 1975, look for a little bit of an area around 19.25, and then a major area just below $19 on the even number. Now, there was a stock that I had on the hot charts that triggered today. Beautiful trigger on this. Take a look at this. I said on a pierce or hit of $8, this is going to be your buying opportunity on Nokia. Nokia, again, gapping below, but no sooner does it gap below, it regains it and pushes all the way back up. And again, I love this to the upside here. And again, a lot of the chat members, a lot of the research center members picked this up on the gap down today around $7.75. It's already back to about $8.05, 30 cents in the money on a $8 stock. Beautiful little move right there for a good percentage. In addition, CPSL, China Precision Steel here. I gave this to the chat room and the research center yesterday, right down here on the back of a possible rebuilding going on in Japan. And again, symbol is CPSL, China Precision Steel. And sure enough, look at the last 2 days, right up into my resistance area. And again, really from a move from 162, 163, all the way to about 180 high today, 179 high. Beautiful little move on that small cap. All right, let me just scan through. Exxon Mobil and Chevron are lower today, but not substantially lower. Exxon's down a little bit more than Chevron, down $1.25, symbol XOM. Now, the interesting thing again is, does Exxon regain the 50 moving average here, or does it close below? This could signal more downside if it closes below. Granted, it has not confirmed yet. All right, in addition, Chevron is really not getting hit too hard today, down 50 cents. For the type of drop we've seen in the market today, that's not that much of a move to the downside. And again, 50 moving average support is major right here. And even this little pivot top, that's where this market is, where the Chevron is holding support. See this little pivot top right here? See how a couple days ago it hit, and then today it hit, and then bounced right off of it? That's the major level right in here. And again, 50 moving average just below that. Now, just a reminder, folks, remember, you can join the Research Center. The Research Center is something that we do which gives enlightenment to every swing trader, investor, and day trader. We essentially provide guidance, market analysis, stock calls, and everything you could imagine, psychology analysis, and so on in the Research Center. The Research Center is one product, one service. You get everything underneath the Research Center included. You can check it out at inthemoneystocks.com. In addition, if that wasn't good enough, that's all that's included. You can even take a free trial, 7-day free trial, 1-week free trial right there. Go and join it. Again, the winning trades, there were more winning trades today, folks. One of the winning trades from the Research Center that I took profits on today, SDS. I was long SDS, which is 2 times short the S&P 500. Wouldn't you have liked to have been short the market here, guys, going into today? Well, I was, as were members of the Research Center, using the SDS. That's the double short S&P 500. And again, made $1.46 profit on this as it gapped up this morning pre-market. I even unloaded it and took my profits and ran, and that was a smart decision as it's come off and the market has rallied back. As the market rallies back, this obviously goes down, and vice versa. It goes in the opposite direction of the market, since it's an ETF that when you're long, you're 2 times short the S&P 500. All right, so again, that's Research Center right there. Take the free trial. Very least, you make a couple $100, a few $1,000, a few million, whatever you're going to make in that free week. And if you want to stay along with us, feel free. All right. Apple Computer's under pressure today. This was on the Bearish Pro Trader watch list, guys. Another great call from the Bearish Pro Trader watch list right here. We had some stocks that were bearish and stocks that were bullish. And this is the beauty of what we do, folks. And I want to just explain this. Symbol AAPL right here. The Pro Trader watch list is a compilation of essentially what our main traders here, the traders that we trust, are watching for possible plays. And again, some of them are in the plays, some of them are watching the plays, but bottom line, it's giving you an idea. That's included in the Research Center. And what's cool about this, folks, is that you essentially have plays that are bullish and bearish. And for instance, a couple of the bearish plays today, or going into today from the last few days, were Apple from about 352, I believe, and we took it off the list at about 342 for about a $10 gain. But the other play was also USO. We had bearish call on the USO from up here, nailed that on that massive drop. So a huge bearish call there as well. And the funny thing again is that we even had a bullish call on there that we took off today for a massive profit. The bullish call was on FSLR. FSLR going bullish right around this area here. And again, knowing the nuclear scenario here, where if nuclear is out of favor, which is obviously going to be after this catastrophe, more alternate energy is going to be looked towards. And sure enough, folks, solar has had a monster move. We nailed that one. So notice how you can be bullish and bearish. Some stocks you can be bullish on and make money, even when the market goes down, and some stocks you can be bearish on, and they'll pay you off beautifully. And again, this is all-inclusive Pro Trader watch list, hot charts and alerts, nightly videos that I do personally, 30-plus minutes in length, where we do analysis on the markets, way more in-depth than these free videos of an intraday. And again, folks, let's go back and let's take a look at the spiders here. Spiders, FOMC again, really keeping things pretty much in place. Housing sector continues to be depressed. We know that. I mean, there's nothing really new here in all fairness. You can see the market selling a little bit on the Fed announcement right here, but it looks like pretty much a non-event as more people are focusing on what's going on in Japan and the global issues in the Middle East as well. All right, so again, folks, come join the Research Center, take a free trial. You can also join the chat room, take a free trial of that. It's there for the taking. And again, we look forward to having you with us. Have a great afternoon, great evening, and again, let's make some more money. We've been making it so far. Take care.